Good morning, and welcome to Tech Threads, the 5-minute briefing where two overcaffeinated technologists try to make sense of markets in megacaps. I'm Tech Speaker 1.
And I'm Tech Speaker 2. Short on patience, long on opinions. Let's dive. This week is shaping up as the busiest of Q1. A Federal Reserve policy meeting, plus a wall of megacap earnings from Apple, Microsoft, and Meta, with industrial names like Caterpillar, GM, and Boeing also reporting.
That's a lot to unpack in 1 week. Quick summary for listeners. The Fed meeting is the marquee macro event that could shift interest rates expectations, while big tech reports will likely drive market sentiment. Industrial earnings will give us a read on real economy demand, and trade or tariff news could add volatility. Tech Speaker 2, what are the key things investors should be listening for from the Fed this week?
Great question. The Fed statement and any forward guidance are the headline. Investors will parse language on inflationary pressures, whether the Fed signals further rate hikes or suggests holding steady, and how they view the labor market. Even small wording changes can move equities and bond yields because markets trade on nuance. In practice, people will watch for any hint about the pace of policy normalization and whether the Fed is comfortable with recent inflation trends.
So basically, the Fed's word choice matters more than their coffee order. Switching to earnings, big tech's quartet is front and center. What should listeners be watching when Apple, Microsoft, and Meta report?
For the tech giants, guidance matters as much as results. Investors want to know about growth drivers, consumer device demand and services for Apple, cloud revenue and AI investments from Microsoft, and ad revenue trends plus AI monetization from Meta. Market reaction will hinge on whether companies beat revenue and margin expectations and, crucially, what they say about future quarters. If guidance is conservative, even solid numbers can lead to sell-offs. Also watch commentary on CapEx and AI-related spending. That's a current focus for the street.
Got it. Now, the calendar also includes Caterpillar, GM, and Boeing, big industrial barometers. How do their reports feed into the macro picture?
These industrials are proxies for global demand and supply chain health. Caterpillar's order backlog and dealer inventories reveal construction and mining activity. GM's commentary can flag auto demand, EV production cadence, and supply constraints. Boeing gives insight into commercial aerospace recovery and order trends. Together, they show whether the real economy backing tech optimism is holding up or cooling, which influences central bank decisions and earnings outlooks across sectors.
And don't forget energy names like Chevron and the wild card, trade and tariffs. How big a risk are tariff developments this week?
Trade and tariff policy are classic volatility triggers. Any unexpected escalation affecting exporters or key supply chains can spook markets, especially for industrials and semiconductors. Even the prospect of new tariffs can shift guidance for multinational companies, so it's a meaningful tail risk to monitor alongside earnings and Fed commentary.
Before we move on, any immediate tactical advice for engineers and technologists listening who also have personal portfolios?
Keep time horizons in mind. Short-term traders should brace for headline-driven swings and use tight risk controls. Long-term investors should focus on fundamentals and whether earnings reveal durable competitive advantages, especially around AI and cloud. Diversify across sectors. The week could favor tech on big beats or punish it on cautious guidance.
Nice. All right, let's transition literally and figuratively to how AI themes are coloring these reports. Okay, quick pivot. A running theme this earnings season is AI. Who's spending, who's monetizing, and what's real versus hype. As a tech lead, how should I interpret AI commentary from these earnings calls? Soundbite or signal?
Think of it as signal with noise around the edges. When companies quantify AI revenue or point to specific monetization paths, like enterprise subscriptions, ad yield improvements, or cloud usage growth, that's a signal. Vague statements about investments without timelines are more like marketing. For technologists, listen for concrete metrics. ARR from AI products, cloud consumption growth, customer adoption rates, and gross margins on AI services.
And when these companies give guidance tied to AI, should markets cheer or raise an eyebrow?
Both. Markets cheer if guidance ties AI to scalable, repeatable revenue. They should raise an eyebrow when guidance hinges on hoped-for demand or undefined future products. The reaction depends on credibility. track record of delivery matters. Microsoft's cloud and AI revenue cadence, or Meta's moves to monetize AI in ads and messaging, will be scrutinized closely.
Last question. Any signs we should watch that would indicate a broader market rotation this week?
Look for leadership changes across sectors. If industrials and energy suddenly outperform on strong demand signals, it suggests a rotation towards cyclicals. If tech megacaps rally on robust AI monetization, it could reinforce growth leadership. Volume, breadth indicators, and sector ETF flows during and after earnings will tell the story.
Excellent. That's our 5 minutes. Any parting advice?
Keep ears on the Fed, eyes on guidance, and don't confuse short-term noise with long-term signal. And for the love of messy whiteboards, back up your models.
Thanks for joining us on Tech Threads. We'll be back after the Fed drops its statement and the earnings tide rolls in. Stay curious and maybe close your laptop for lunch.
Unless you're debugging production, then definitely don't close it. Catch you next time.